Hello guys, welcome to another video on COINISM. So in this video we'll be talking about Bitcoin analysis. We'll be looking at the smart money analysis. Also we'll be looking at from the retail point of view, and we'll be talking about other blocks, inefficiencies, and the rest. Let's go down to this video. So and if you're new to this channel, I want you guys to subscribe, leave a thumbs up, and also you can drop a comment for maybe you want to learn about other blocks and the rest. So maybe I can do a separate video for that. So going down to this video, let's do this stuff. Okay, so at this position you can see what. Okay, so at this position, let me use the retail point of view before I go into a smart money point of view. So as a retailer, maybe I've seen one touch, I've seen the second, and also I'm seeing maybe a third touch. Okay, what will I do when I see this third touch? All I do is I'll place a buy stuff around here, place a buy order around here, then also I'll put my stop loss maybe around this whole region. You get, so put my stop loss around this region, then I'll take profit around this whole region, maybe this region, maybe if I'm not too greedy, I guess. So and then I see a first breakout eat up my stop loss. I'm like, oh wow, this is market is very fun. You can't really predict this stuff. But okay, let me go down to the smart money point of view. This is just smart money traders creating liquidities. The big banks, the big investment banks and the rest, they're creating what we call liquidities in the market. So liquidities is simply, let me just put it in this way, it's like you need buyers to sell, you need sellers to buy. That's it. So I'm buying something worth millions or billions. I need person selling something worth billions and millions. You get. So at this point in time, they target or they hunt your stop loss because maybe you're trading with $10,000 downwards and they are trading with 100 million upwards. You get difference. So they just go up, hit up your stop loss, then they sometimes you see they also go back in the direction you predicted the market to go before. So like in Bitcoin now, let me say you predicted the market to rebound after you see this old stuff around there. Okay, you predicted the market, okay, to go up. Now you can see we are heading up. Also we are heading up. Okay, so let me do another stuff from the retail point of view. Okay, I can see something like okay, I can see something like okay, so we all can see a trend line. Okay, say one touch, two touch, oh that's very nice. They are going down. You can see how the market is reacting to this stuff right now. So you can take, oh, maybe the next candlestick or lower time frame, 1 hour time frame. You can see a red candle forming already. So you say, oh, let me place a set trade. You place a set trade before you see the next 4 hours. You see that the stop loss will be around somewhere here. So stop loss has, or let me say around somewhere here. I don't know, maybe somewhere another region. You see your stop loss taken out, and you see the market move either that downwards or head upwards. So in this point, all I say or all I give out as a prediction. Normally, you don't predict market movement; you only react to market movement. So we've tested this other block already. We feed up this whole inefficiency around this region. See one around this stuff to here. Yes, you can also see one around here. See one around here. See one around here. These are all inefficiencies that needed to be feed up, and you can see them already feed up already to this whole level. And also there are also inefficiencies at this point. You can see inefficiencies at this point. Also, you can also see inefficiency at this point. So this maybe in the future you can see that get feed up, but for now I don't see it going down. But you can't really predict. You just or I say again, you just react to price movement. You don't really predict price movement. Okay, so we can see this other block, this red candle. This is the last red candle before this big push upward. So that's our other block. And also we have tested this other block. So other blocks are where the big investment banks, those big banks you see with $100, 100 million worth of cash. Yeah. So these are these places they look at for this three rectangle I drew on my chart. So you can see this other block also. This is the last candlestick before this big push up, and also this is the last candle. Yeah, you can see I took my own from week to week. You can also take your own from the opening to the close or something like that, but I took my own from the week to week. And so this is the last red candle before this whole green stuff push back upwards. So right now, all I want you guys to do is just simply wait for the market to maybe react to this stuff, or you can place. You can wait a little bit. This can be another block if this prices push above this whole trend line, and you can wait for a retest of this. Okay, let me just indicate that. Okay, you can wait for a retest of this other block that has been created at this place. You can wait for a retest. That's other block. Sorry, other block 2.0. You can wait for that after this first other block. You wait for a retest of this other block before really putting your placing your trade. Okay, so guys, I want you guys to subscribe to this channel if this content was very helpful. I want you guys to leave a thumbs up and comment. Yeah, comment if you want to know anything about other blocks and liquidity and the rest.